Good evening, everyone. It's really a pleasure to see you here, and it's fantastic. It's just good to see some familiar faces and people that I've not met before. So thank you for joining us. We'll have people coming in during the evening, so please feel free. If you've got any questions, by the way, during the presentation, then please put them in the chat and we can pick them up later. If not, there will be questions and answers. We're going to aim to go till about past 7. If there are specific questions not relating to the speaker or the subject this evening, again, put them in the chat because we'll be able to help you with those later. Or maybe you can reach out to me tomorrow or the next day or sometime that we can help you with those. So for those of you who don't know me who's just joined us, I've been in property in the southeast in Kent for the last 30 years. I was going to say 30 decades, but no, 30 years. And buy and hold investor. So I buy properties and hold them for a long time. I started off in residential property, and I've got, as I say, property portfolio in Kent and one in Stoke-on-Trent. I've moved into commercial and commercial conversions as well. So we've got pubs, office block that we converted into flats, a church that was converted as well into flats, and we have lots of properties in Dover, Kent, and some in London as well. So, but this evening, it gives me great pleasure to invite Paul Merrick, who's been helping me over the last 6-8 weeks as a consultant to our business, to me personally, and just helping me along my journey and to the next levels and understanding. And the understanding is fantastic because I thought as a business consultant, he'll be looking at things like spreadsheets and property and everything else. And it's all to do with people, mindset, etc. So, if you need any help, reach out to me. I can put you in contact with Paul if you need any help in your business and moving forward. As I see some familiar faces, good evening, John. I'm glad to see you here. John's the big landlord in Tunbridge Wells, Royal Tunbridge Wells. Really, really great area and great investment area. But you can invest anywhere in the UK. You can invest anywhere in the world. It's just having the right strategies. It's having the right mindset and everything else. So before I make the introduction, I'll pass over to Paul, who can introduce us to our main speaker. So the main speaker must be good because he's not just getting instruction from me, but I'm introducing the person that's going to introduce him. So, grab your drinks, make loads of notes, etc. And as I say, if you've got any questions, please put them in the chat. We're happy to take those on. Is that okay with everyone? Yeah, fantastic. Paul, good evening, welcome, and over to you, my friend.
Good evening. Good evening. So me and Ashad had a chat last week when Sunil had asked me if I would kind of come back on the Zoom stroke podcast stroke YouTube, and I said to Sunil that while I have some interesting stories to tell, Sunil at the moment has a more interesting story to tell because Sunil is just kind of moving in his journey and making a substantial move. And the same is true of Ashard. He's making really substantial moves in his journey. Whereas my journey moved a long, long time ago. So I'll introduce myself and then I'll introduce the main speaker of this evening. In terms of the Q&A at the end, I suppose you're getting, well, 3 for the price of 1. Sunil's been in property for 30 years. I've been in property for 3 decades as a developer, and Ashard's been in property for quite a while as well. So you're kind of getting 3 speakers for the price of 1. And considering the price you're paying tonight is free, that seems like amazingly good value. So if Ashard wants to shove up the first slide, then I will tell you a little bit about myself. So my name's Paul Merrick. I'm a Scottish business owner. I'm an angel investor. I'm a business consultant. I'm a professional speaker. I'm a property developer, and I'm co-author of a book that has done very well, actually. We released it about 1.5 years ago, and it's done quite well, called Unpacking Your Property Business Plan. I started my business career and established my first business at the age of 15 and was exporting vehicle components halfway around the world by the time I was in my mid-20s. We started our first property business back in 1998, and we started that with a grand sum of £40,000. We now have a multi-million pound portfolio, which is debt-free. I'm involved in a number of businesses across different sectors, including property. And we have been involved in developing many properties over the years and have built up a debt-free portfolio of both commercial and residential properties. Because I enjoy spending my time with people and sharing the experience that we've garnered in that 30 years in property and 45 years in business, I now spend a great deal of my time with smaller businesses as a consultant, kind of helping smaller businesses and solopreneurs take their business to the next level, which is what Ashad and Sunil will both touch on tonight. But for me, I want to close my mouth and open my ears at this point and hand over to Ashad.
Thank you very much, Paul. It's a pleasure to be here. And listen, guys, I know a lot of you taking the time out to be here with us, and I can see a number of you have got your videos on. I always feel it's important that I can kind of connect with the people in the room. So I'd really appreciate it if you put your video on, and if you're busy, well then you're too busy to take in anything that I'm going to say or Paul's going to say, or even the value that Sunil's going to bring. So I'd love for you to put your camera on so that we can get the most of tonight and I can get that audience participation. So about myself, Arshad Ali. I'm a property business owner. Now, I used to be a property investor. Have we got some of them in the room? And it was only until I met Paul that I changed over, and I'll touch a bit about on that later on. I'm also a senior actuary at Aviva. So what does that all entail? I've got 15 years experience as an actuary where I've managed multi-million, if not billion-pound pensions, investments and insurance portfolios for the likes of Aviva and Scottish Widows. And along the way, I've built a 7-figure property portfolio, which is a mixture of buy-to-lets and SAs. And also, a bit like Sunil, I host my own event, which is Glasgow PIN. That's Property Investors Network. So that's in conjunction with Simon Zucci. You may have heard of them. So earlier on, I said, I used to be a property investor, whereas now I see myself as a property business owner. So what is the difference? Well, a property investor tries to build a portfolio. You know, that's the be-all, end-all. Let's just find another property and add it in and, you know, find the next one and the next one. Whereas a property business owner builds a business. The first one often jumps from deal to deal, taking whatever they can and whatever comes their way, as long as there's something in it. Whereas a property business owner has a plan, a business plan, if you would. Someone who uses their knowledge and gains a competitive edge and who truly understands risk and reward. They solve complex problems and bring the right help in at the right time to help propel long-term success. See, the thing is, what the property investor doesn't realize, and what I didn't realize, was I'd created another job for myself. Whereas as I transition to a property business owner, I'm creating something bigger, something that'll make a difference not only to myself, but also society at large. So the title of tonight's talk is What's Next for Me? And I think the best place to start is at the beginning, and a bit of a run overview of what we've been doing for the last 5 or 6 years. So here's the portfolio. And as I say, it's a mixture of buy-to-lets. And to give you an idea of the level of work that we do and the type of projects that I have been doing, so we pick them up like this, where they're dilapidated and loved, turn them around into something like that. And you can see we've got a number of projects. There's number 12, sort of turned that round, and that was an SA unit. And then most recently, just finishing off project 17, we're putting the final touches on that, and you can see the extent that we go to. So overall, it's been a mixture of BRRs, and if you looked at those properties, you might be mistaken in thinking they all look a bit samey. In fact, is it even different properties? Has he just turned things around and swapped rooms around? But I kid you not, they're all different properties. And the thing is, the way I was doing it was the cookie cutter approach, where you take something and you improve it and you improve it until you get to a point where you get a set of keys and you know what kitchen's going to be, what the bathrooms, what the flooring, what the decor, and it just gets all a bit samey, and the passion and the drive just kind of disappears. And I thought I was doing really well. Really well. You know, I built a seven-figure property portfolio. But it wasn't until I started working with Paul, a business consultant, that I realized that the people who were doing really well were the ones I was working with. And there was a little in it for me at the end. And I was always at the end of the line, whereas everyone else got fed first. So what that meant was, over the past 5-6 years, I've put in a huge amount of effort, but really I was getting paid last. And so that was a seminal moment for me to realize, well, this can't continue. Well, I could let it continue, but I know where I'd end up, at the end of the queue. It was time to make a change. So here's where we're going to. Commercial developments. I can hear the atmosphere drop a little in the room. It's a bit scary here, isn't it? So what do you think of when you see the word commercial developments? Are they risky? I think so. Do you? Because you might not get the planning. The refurb might take longer or even cost more. And remember, the sums involved are far larger, so everything is a lot bigger. But if that's all you ever think of, this is where you stop, yeah? It's important to be aware of the risks, but also importantly, understand that there's rewards at the end of it as well. And talking of rewards, let me share with you the current commercial development project that we're about to complete in the next week. So in this one, the numbers are, because I know how we all love numbers, the site purchase is 450,000. It's actually worth more than that. It's worth over 500,000. So on day one, we'll be making a profit. And with a bit of planning gain and land assembly, which is more a paper exercise, it'll be worth 600,000. Now, it's a 8,750 square foot unit, which will cut up into 3, put 2 blue chip food outlets at the front and a retail unit at the back. So with the likes of those, you just need to provide a solid unit with utilities and they'll do the rest of the refurb. So the cost of the conversion will be 200,000 and we'll carry that out ourselves. So we'll be in for a total of 650,000. And we expect a rental income per annum of 100,000. And a GDV of 1.1 million. That's approx. So what does that mean? Well, looking at the profit margins that I'm now dealing with, some of you might have worked out already. It's £450,000. That's £450,000 for me and the people that I work with. So are you beginning to see what I was meaning about, yes, there's risks, but there's also rewards as well. And it depends on what you're made up of. And talking of rewards, that's not all. So there's something called the long-term customer value. Now, it's above my pay grade, this, but if you follow the numbers, so we expect an annual income for one of our units of 40K. And with these type of blue chip tenants, you're looking at 25-year FRI leases. So the long-term customer value of that customer in that unit is circa 1.5 million. Oh, and it gets better. because that's just one of the tenants. We get the same for the other one. And the retail unit's slightly smaller. So that'll be circa 1 million. Now you can do the maths in there. So let me ask you again what you think of with commercial developments. Because this is how I see it now. Yes, there's risk involved, but I'm focused on the reward, and so are the people that are working with me. So we'll go into a bit of a Q&A, and I'll leave my details up as well, Paul.
Actually, that's absolutely brilliant. Thank you. And the figures speak for themselves in terms of what you can achieve, of what you put in, and what your NGDV is, etc. My first question is, how did you find that property?
So that property took a lot of hard work, you know, and it's working with the right people at the right level, the introductions that were made. So with regards to that, and these kind of deals you don't find on the open market. And the thing is, even if an agent did have a deal like that, why would they bring it to you? So that's one of the reasons why I can't share that much more about the deal, because it's still commercially sensitive, because we're just a couple of days away from signing the final paperwork. So but otherwise I would have had the screenshots and the aerial views and everything here for you.
In sort of general terms, was it direct to vendor? Was it company to company?
Yes, direct to vendor. It's the connections of the connections. You know, you've been working with Paul yourself, and you know the level that he operates at. So it's that kind of, you know, getting you access to the crumbs of the table for people that are a lot higher up in the food chain.
Yeah, fantastic. Daniel's got a question in the chat, but Daniel, if you're here, and Carl, I'll come to you in 1 second, but if Daniel, if you can unmute and ask your question, that'll be better.
Hi, everyone. Yep, the question is, how are you working out these commercial values? Because they're very complex to, you know, the residential stuff, and, you know, based upon who you have in there, etc. So it'd be really good to know in advance, you know, how you're working out these figures. That would be useful. Thank you.
Yeah, so with regards to the figures, they're, you know, as it's the first project I'm I'm relying on the expertise that's in and around me, as well as doing my research as well to kind of check up on that. But that's the advantage of having someone like Paul on your side, is that, you know, these are the kind of projects that why you bring in the external expertise is, for instance, you know, you may want to go out and get a valuation. So you're bringing in outside expertise, aren't you, with regards to what you're looking to buy? So it's that same kind of idea of bringing in the right level of expertise to help you take the next step.
Can I pick up on that? As I say, guys, you've got the opportunity to have 3 experienced people, and Sunil's got some commercial property as well. So commercial property lets very differently than residential property. We have a mixed portfolio, as I said at the beginning, of both. 60% of our properties are commercial, 40% are residential. I've always preferred commercial. So in a residential property, it tends to be, you look at the market in that particular street, in that particular area, and there's a set figure, you know, X amount per month for that particular flat or that particular house. With commercial property, it's really interesting because it is, as you say, Daniel, quite complex. Firstly, you let commercial property per square foot. So you look how many square feet you've got, and then you let that per square foot. And there's a pound ratio per square foot, depending on 3 things. One of those things is the area that it's in, like any other property. The second one of those things is what type of end user do you have? Who's going to occupy that property? And that makes a huge difference in commercial. It doesn't really make any difference in residential. You know, it doesn't matter whether you have somebody who has a high-paying job in your residential property or whether you have somebody who's a road sweeper. The price of your residential will be the same. It's very different in commercial. Different companies make different amounts of money in the same location. So therefore, the more money that a particular end user, your tenant, can make in that particular location, the more money they will pay per square foot. And third and finally, you take two values when you're valuing a commercial. You take the bricks and mortar value and you take the tenant value and you put the two of those together. And it's one of the reasons I really like commercial property, because by putting a tenant into a residential property, I'm actually more likely to take the price of the property down if I was to sell it with a sitting tenant and take it up. But if I put a tenant in with, as we're talking about here, blue chip tenants with a 25-year lease, then I'm going to substantially increase the value of that property. So I get two bites of the one cherry when it comes to value in a commercial property. I get the value of the bricks and mortar, and then I get the value of bringing a quality tenant into it. And what you do is you look at that. That's the slide. Can I take you back a couple of slides, Asha? To the slide where you were talking about the increased value. So what you do is you look at the lifetime tenant value of a commercial property. So you've no idea how long a tenant's going to stay with you in a residential property. You know, they could give you notice fairly quickly, and you can put them in for a period of time. But you're not going to find a residential tenant who will commit to be your tenant for 25 years and guarantee you rent for 25 years. Whereas commercial property, anywhere between 15 and 25 years is the norm. We're actually doing one at the moment, which is a 35-year lease with guaranteed income for 35 years. So to value a commercial property, you can't do it by kind of doing comparables, because there's no comparable. It's a skill set. It's something you need to learn to understand, which is you've got the value of the bricks and mortar, and you've got the value of the tenant, and then you've got the time that the lease runs and the value of the customer over a lifetime, and that's how you value a commercial property. Does that answer your question, Daniel?
Yeah, that's been very useful. Thank you. Just out of interest, then, you mentioned there's two values, the bricks and mortar and the tenant value. Where are you calculating the tenant value? So is it a simple case of there's a certain site with certain statistics that you look at, or is it a case of your connections with such larger companies that you maybe have a conversation with them to say, look, I'm potentially interested in buying this site, would you be interested, that type of thing?
Combination of both. So what you do is you look at a certain area and you say, right, what price are we getting per square foot here, depending on the end use. This is where it becomes quite complicated. You know, let's say that you could get two very different businesses, right, in the same size location, right? So let's say you could get a hairdresser. Let's say you've got a high street location, and you could get a hairdresser, right, or you could get a restaurant. Which one of those do you think would make the most money, Daniel, a hairdresser or a restaurant?
Hard to say. The hairdresser has a lot of volume going through.
But
the hairdresser would have the most profit, but the restaurant would have the most turnover.
There we go. Thank you very much. Right. So the restaurant would have a much bigger turnover because the sale price per customer, the customer value to them, everybody that walks through the door, is likely to be much more than it would be in the hairdressers. But the hairdressers could have the larger profit. And it then becomes between those two tenants who really wants that the most and what price they will pay you per square foot. So this one is in a very desirable area, and the price per square foot is quite expensive. So therefore you take that price per square foot and you say, right, okay, I've got my price per square foot. And then how long are you going to have that price for? Are you going to have it for a 5-year lease, a 10-year lease, a 15-year lease, 20-year lease, 25-year lease, or in the case of the one that we are just doing at the moment, a 35-year lease? And that gives you your overall customer value. And this is very important in commercial because your customer doesn't really have a value or a long-term value in residential. You're constantly changing your customers. And if you go to the bank for borrowing and you say, well, look, I've got this buy to let here, but, you know, I don't know how long my customer's going to be there. They will take a ratio, which they do, as you know, and say, right, okay, we need 125% or 140% times the amount of the rent. With commercial property, if you go with a good 25-year lease, a bank will lend you on part of that £1.5 million over that 25-year period, because they know you've got steady income coming in from a good tenant and good values. Does that help?
Very much so, thank you. Just one more question, if I may, if I'm not asking too many questions. Existing commercial tenants, based upon the lease and the annual income, what is the multiple that you work on for that?
So sorry, if you're going and you're looking at an existing, so let's say that a property's producing £100,000 a year because it's a good round figure. How would you value that? Well, if you had a long lease in place, you would value that at an average valuation. It is a bit of a black art commercial property. It's one of the things I like about it. Not everybody in the street can value it. Everybody thinks they can value residential property. They jump onto Rightmove and Zoopla and they're suddenly a property expert. Commercial's a lot more complex, which I think gives a lot more opportunities. But the average would be 10 times. So you would take 10 times the value of the rental, and you would take a bricks and mortar value of it as well.
Fantastic, Paul. Yeah, thank you. Thank you so much for explaining. We'll come back to some of Daniel's questions, but I think Carl's wanting to ask some questions. So, Carl, whereabouts are you based?
South Wales.
Oh, okay, brilliant. So we've got Scotland, South Wales this evening.
Don't let the background deceive you.
Yeah. Swansea. Yeah, I'm really pleased that you're here. So would you like to ask your question?
Yeah, Ashad, in regard to this particular slide, where you talk about your 40k per annum income, that's only 1 million over the 25-year term. So how did you get to the 1.5, or have I missed something in your calculation?
Yeah, so Carl, you have, as Paul mentioned earlier on, there's a bit of a dark art involved with regards to the calculation. So as an actuary, you're just going to have to take my word for it. Otherwise, I'm going to bore everyone to death going through the minutiae of how it's worked out. But you're going to have to trust me, and even if you don't, then it's okay.
I'll explain it a little bit simpler. I'm not going to go into the actual detail, but if you're a bit of a numbers guy, which I find myself being, right?
Some of them are that way.
Yeah, when you take on a commercial lease, you do it if you're not charging somebody £40,000 over a 25-year period. You put in incremental increases in that 25-year period. So the incremental increases, without going into the detail of what the incremental increases are on this one, the incremental increases that you've already built into the lease that they have to pay adds that other £500,000, if that makes sense.
Thank you, Paul, because I was going to start into compounding and increasing. I feel like my spreadsheet to show you.
Remember, you're talking to an actuary. If you get an actuary on numbers, we'll be here till Friday. Yes.
So, Carl, what do you do in Swansea? Or what do you do in Wales, South Wales? I'm assuming.
I'm into a mix of things as well. Like yourselves, I'm a bit of an entrepreneur, and it's on a business basis because I've got a couple of companies going. Engineering, transport training, and property development, and it's a case of getting yourself systemized so that you can build a business and not just find another job, as your slide showed. That's kind of my game as well. And I wanted to ask one of your comments at the start, Sunil, was about having a portfolio that's debt free, and that, to myself, and I'm sure to many others, seems counterproductive because you want to release as many funds as possible to keep going and keep recycling. So I just wondered if that was a particular focus, or was that a lucky chance? And well done you.
Well, I'll explain that very quickly. I got into property 30 years ago to own property, not to own debt. And I own quite a lot of it now, thank you. And we deliberately wanted to be debt free. In fact, in the first 5 years, I set myself the goal of having £1 million. I started with £40,000 and wanted £1 million with a debt free property. And I actually managed to get £1.2 million with a debt-free property in the first 3.5 years and an income of £130,000 per annum. Now, I know there's lots of people like gearage and like leverage and like using other people's money, and fine and dandy, that's your call, and I'm not going to criticise it. The only word of warning I will give you is, because I have been in property so long, we went through the 2007 crash. And many of the people that I knew who were in property in 2007 aren't even in business anymore because they lost everything because they were over leveraged or overstretched. So, you know, you can be maximum leveraged, you can be minimum leveraged, or you can choose not to be leveraged at all. Ask me why I do it. I'll tell you why I do it. I've always been able to buy properties that other people haven't been able to buy. So I'll give you 2 examples of that, Carl, right? That you find me funding for because nobody would lend you on it. I bought one property for £70,000 with no access, a commercial property with no access. I then spent £8,000 getting access to it, and I sold it for £450,000. Now you show me the lender that would have lent me the £70,000 in the first place for the property with no access. I bought another property, which we've got an offer on the table at the moment for, and I've owned this for about 10 years. No, it's not that actually, it's about 6 years. And we bought that with Japanese knotweed. We spent 3 years getting the Japanese knotweed cleared on it, which you can do if you pay enough money. And we bought that one for £163,000, and we've got an offer on it at the moment of £1,008,000, which is a very odd number, but the £8,000 was paid legal fees because I didn't want to pay my own legal fees. So what having a debt-free portfolio has done for me is it got me through the 2007 crash, not surviving, but thriving, right? And buying things when other people couldn't because there was no liquidity in the market. There was liquidity in my pocket. And secondly, it's given me the opportunity to buy properties that other people couldn't buy because lenders wouldn't lend on them. Then, you know, fix whatever the inherent problem was and then put it back to the market as a fixed problem that people could borrow on. So it's not for everybody, but it's worked very well for me. Thank you.
Okay, good. Thank you.
Carl, there seemed to be a reason behind your question, as in, why would you not leverage? Is that correct?
Yes, that's exactly it.
Okay. So Paul's giving you the reason. He's saying that he's got a debt-free portfolio, has lots of cash coming in, has the assets, not controlled by anybody, or not controlled by interest rates, etc., etc. So there's lots and lots of benefits there.
Mm-hmm.
I'll give you my view, which is similar, because I started paying back. I had loans, and I had loans with Mortgage Express and Rezinka, and in 2007, 2008, when the interest rate was at 5-6% and it dropped to 0.5% and all of those things, I started going on to repayments and started paying back. So again, with the same objective of getting a debt-free portfolio. I didn't call it a debt-free portfolio at the time until maybe a few months ago that I've spoken to Paul. But it also depends on your cycle, in terms of if you are growing, then there's no point in paying your lender back and then going and getting more money, and especially now paying more fees. Yeah. So back in the day, it was okay because you could pay them back, be very secure, and then you could go and borrow money again. But now I've just got a quote yesterday to buy to remortgage a property, a simple residential property in a company, and the fees are 10,000. It's a 5-year fixed. So it depends on your cycle, on what your overall aim is as well. So now I've changed, because as I say, I've been speaking to Paul. My aim is to get a debt-free portfolio, but it's also not to sell. So if I stop buying and then start paying back as the rents increase, etc., etc. So leverage is good, but it depends where you are in your journey. And if it's too leveraged and you haven't got the cash flow and you haven't fixed your mortgages, you could be at risk. Yeah. And having gone through, like with Paul, we've gone through probably 3 recessions, and each recession will have a different level of thing. But at the end of the day, if the interest is going up, you've got to be able to service the loans. Why do people get repossessed, Carl?
I said if they run into negative equity, they end up in all sorts of problems. But that's where you have to protect yourself and watch out for those problems.
Yeah, you can't. They basically can't service the loan. But I would say that really consider what Paul is saying in terms of debt-free portfolio, because as I say, I've had a certain mindset for a long time, and then it's something fresh and coming along saying, okay, look, you could do it like this. You don't have to do the traditional way. You don't have to do what all the trainers are teaching, etc., etc. So it's just, yeah, take on board the bits that you need to, and it's like going shopping. Take on board what you need to today, leave the rest here, come back next month, and pick up something else.
So Neil, can I add to that, please?
Yes, certainly.
Thank you. I work with Fairstone, just to let everybody know, and we deal with property investors and the financing of property investments. What I will add to that is in support of what Paul and Sunil have just said, is over the past few years, there have been a lot of trainers out there that have presented everybody with the opportunity of a 4 or 5 bedroom or 6 bedroom HMO being on a commercial valuation. The lenders are coming back at the moment with being very wary on this, because what's happened is the market's got saturated with people having commercial valuations that, if they had to sell the property, wouldn't cover the loan. So, it's exactly right what Sonny was just said, that, be wary of where you sit with a whole portfolio, because if it's over leveraged, you are a massive risk. So it's just being wary of having a portfolio that you can stand by and that you can afford at all times. I hope that helps.
No, brilliant tip, Paul. Thank you. I would also say, Carl, it's also dependent what the future holds, because okay, like at the moment, I'm remortgaging every month because of the size of the portfolio. But how do I leave that to somebody else, kids, grandchildren, whatever, because I've grown up with this? But am I going to present them with a problem, or do I want to present them with a debt-free portfolio that says, look, there you go, and you manage it? I need to get away from lenders. Look at the fees that they're charging. Yeah, 10 grand. Oh, you can add it to the loan, but then you're going to pay us interest on that loan for periods of time. So it totally makes sense in the market that we're in. But I'll leave those thoughts with you. I'm going to go to Vicky. Adam, I'll cover your question in a minute. And Topsy, I'll come back to you in just 1 second. So Vicky, are you able to unmute? And are you there, Vicky? Okay, she's saying I have the same question. Tops?
Hi, can you hear me now?
Yeah, perfectly. Thank you. I'm sorry if I got your name wrong, but
All
thank you
right.
for joining us this evening.
No worries at all. Thanks.
Introduce yourself first.
Yeah, sure. My name's Topsy Taiwo. Background in a estate agency. Used to work at Foxton estate agent for about 8 years. About 5 years ago, I set up my own platform called Property Purchaser, which essentially initially started as helping first-time buyers and providing reports for them to make more informed decisions, but recently pivoted towards trying to help investors build their portfolios as well, which is what brought me to the group, which is what brought me to this Zoom call. And I just wanted to connect with the group, introduce myself, and yeah, maybe just get a bit of value from some challenges that I'm facing at the moment, and also just thoughts on the market. So I had a couple of questions. The first one being, if you were starting out from scratch in light of a higher interest rate environment, a more difficult tax environment, from a geographical standpoint, are there any places in the UK that you would focus on? And then from a financial standpoint, are there any particular strategies that you would start with if you're starting out with a pot of, let's say, £25,000? I hope that makes sense.
Yeah, brilliant. And congratulations to Foxtons for working with them. I'm sure you gained a lot of experience.
Yeah,
and
plenty. I know it's a love-hate relationship with them, isn't it? So
no, they're good at what they do. They've done stock listed on the stock exchanges, the estate agents and everything else. So
that's right.
Absolutely. So Paul, did you want to come in, or Asha, did you want to come in on that question?
I think
I'll come in last if you like, and I think all three of us should answer that, to be honest with you, because I think you'll get, three heads are better than one, right?
Absolutely.
And three very different points of view, probably, I'm guessing, right? So let's start with you, Sunil, and then we'll go to Ashard, and then come to me if you don't mind.
Yeah. So can you clarify a question? What would you do? 25 grand, where would you start?
Yeah, within the context of geography, i.e. where in the country, and also within the context of strategy, what strategy would you focus on with the part of 25k?
So I don't think you could follow what I did, because what I did was I followed the Acres of Diamond story, and the Acres of Diamond says that the diamonds are in your backyard, they're in your garden, they're here in Sittingbourne where I live, they're here where you live, and people go to a different area to then start looking for something and make it very hard. So having said all that, my first two properties were in Middlesbrough, and it was there because I was there, and then I moved back to Kent. This is my family area, etc. I invest in Sittingbourne in a very 2-3 mile radius. I used to live in South Wales. I have a few properties in North Wales, and I have a portfolio in Stoke-on-Trent. But I lived there. So the Stoke-on-Trent property portfolio, it generates good yield, okay? Where Kent is capital growth, and it's also yield now because of the debt's gone down. So I don't think it matters where you invest, because people are going, well, go up north, go to Scotland, do this, do that. I think it's finding the right deal in any area, and can you service it? Because I don't want to say I'm lazy, but yeah, I'm based in our estate agency. You can see here, this is my office. It goes around there. But 2 minutes from here, I can see the pub that we brought, because I didn't want to go to another town, because in order to do the conversion, it all costs money. Yeah, in order to manage the tenants, it's much easier. And if you then work in a certain area, you're creating a brand. And have you heard the saying about it's not who you know, but who knows you? Yeah.
Yeah, I heard that.
So it goes one step further. It's not who knows you. It's not who you know. It's who knows you. So you'll become the local property expert. So if somebody wants to sell their property, they will say, I'll go and see Sunil. Okay. So if they need to sell because they need to sell that property in order to pay, let's say, care fees, they will know that as the same as if you had a toothache, you go to a dentist, we need to become known as the person to go to if they have a property problem. So I think I would say to you, that would be my aim. It's not important where the specific area is. Whichever area you go to, and if it's on your doorstep, then that'd be great, because you become the person that people say, I have a property problem, I'm going to go to you. I'm going to go to, if it's Scotland, I'm going to go to Paul, I'm going to go to Asher. Because if it's Wales, they ain't going to come to me, they're going to go to Carl. Yeah? Does that answer your question?
Yeah, makes sense. That was perfect.
Yeah.
Thanks.
So that there's probably people who'll go, yeah, you need to invest in this area because it's got growth. You need to invest in this area because Amazon are coming. You need to do this. I just think there's deals everywhere because you have death, you have divorce, you have all of those things that is going to create that problem for somebody where they have to sell. And if you become known as the person in your area, you'll get deals coming to you. Well, you know this anyway because you've been in a estate agency and you've got your platform as well. So I hope that answers your question. I'll go. Actually, did you want to answer that?
Thank you very much, Sunil. Topsy, just to kind of reconfirm, you're working as an estate agent. You're asking the question, if I've got £25,000, what area geographically and what strategy that you would employ? Is that the question? Yes.
That's right. And just to add maybe a slight tangent as well, the sort of thinking behind the question is that there's a lot of talk at the moment of buy-to-let being dead. So when I'm out there finding investments for clients, I'm just thinking, should there be more of a pivot towards essentially deals which you can add more value to and not just focusing on vanilla buy-to-lets? Or is it really just dependent on what the investor wants? But I just wanted to shed a bit more light on that, just so I can make sure I get the best return on investment of my time when I'm out there finding investments for my clients. I hope that helps.
Yes. So there's a couple of things that I'd like to pick up, and I can't, one of the things that kind of we spoke about tonight is risk and reward. And what you can remind me of is like the old version of me when I was starting out, so to speak. Let's build a portfolio, or let's buy something because I've got some money in the bank, and the only way I know and the only thing I can think of is property. But what happened was I ended up creating another job. Now you've got a job as a estate agent already. How many jobs do you want is really the question that kind of jumps up. And the other thing that kind of causes me a little concern is you sound a little bit unsure about what you're doing, but at the same time, you're advising other people of what they should do. So, it's one of those ones where I personally I know my lane. I'm not qualified to advise you on strategy. That's more kind of business consultant talk, and that's maybe Paul can pick up on that. But with regards to, where in geography, I don't think that's the place to start. I think I really should pass this question off to Paul as to this is, I'm not here to advise people on what they should do with their money and their strategy. That's a business consultant's job.
Sure, no problem.
It's also apparently Craig Shepherd's job as well. If you want to have a wee look at the chat, he's kind of became one of the people answering the questions. So Craig Shepherd will tell you what to do with your money. I can't tell you what to do with your money or what to do with your client's money. I can only tell you what I did with my money, if that would be any use to you. Yeah. So what I did, I started with £40,000, which even 30 years ago sounds like a lot of money, but it wasn't. And it particularly wasn't in the area that I lived in, right? And lots of people kind of can't see beyond their own doorstep. So it wasn't viable for me to buy a property in the area that I lived in for £40,000. And even if I did, the rental income from it would have been so little, it wouldn't have actually started me off in a business, if that makes any sense. So what I did was I sat down and wrote a business plan, right? Hence why I wrote a book on it. I wrote a business plan and I looked at where my money would go along the way. And the answer to that was miles away from where I lived. And then the problem with buy-to-let was, how did I manage a buy-to-let miles away from where I lived? When there was all of these things that could go wrong in a buy-to-let. Does that make sense? Yeah. And then I would have to rely on local people doing jobs, plumbers, joiners, electricians, etc. And I would have to rely on the fact that they were going to be honest about how big or small the job was. Yes. Now, tradesmen are wonderful and I work with them every day of the week. But I think if you give them a blank check, they will fill it in. So that's why I went for commercial property, because commercial property is let on an FRI lease, right? Full repair and insurance. In other words, that once I lease a commercial property, it is the responsibility of the tenant. If, a light bulb goes out, it's not my problem. If the heater breaks down, it's not my problem. If there's an issue with the door, it's not my problem, it's their problem. Full insurance and repair. So I was talking to somebody about this the other day, and I normally kind of have quite good communication with my customers. I don't call them tenants, I call them customers. Makes a big difference, but I don't have any tenants, I have customers, right? Because tenant has connotation in this country, right? And customer has a very different connotation. So I don't have any tenants, I have customers. In fact, we used to have a rule in our office that if you called somebody, you worked for me and you called somebody a tenant, you got fined £5 because we only had customers, right? Now, I normally connect with my customers on a regular basis just because I like being in connection with my customers and making sure that we're providing a good service. But because of lockdown and because of COVID, I just realised that there's one of our commercial tenants that I have not seen that property for 5 years. And I don't need to see that property because within that FRI lease, I know that tenant has to look after that property. And should I turn up and see a problem with that property or send someone to see a problem with that property, the tenant has to pay for it. So what I said was, if I'm going to do property next to me, I don't have enough money to do it. So I have to do it farther away. I don't want to do it farther away because I don't want to run residential property far away because I can't control the cost. But I can run commercial property anywhere in the UK. And before we started to sell off our portfolio, which I'm doing at my ripe old age, we had commercial property just right about across the UK. England, Ireland, Scotland, and Wales. So that's my answer. I'm not a guru. I can't tell you how to live your life. And there's loads of people in the comments who will. Right. I can tell you what worked very well for me. Back to you, Sunil.
Yeah, thank you, Paul. Appreciate that. Asad, thank you for your comments as well. And thank you for the question. I would also say that having gone through 3 decades of dealing with tenants, and I'm calling them tenants for the understanding, but let's call them tenants, customers, etc. I don't want any more tenants and customers. I want assets. So that's what Paul is saying, is that commercial property gives you the asset without the headache of management. Yeah. So that's why I've moved into initially commercial conversion, but more now into renting to charities. We have properties where it was an ex-school, but it's split. So we've got on one side we've got a car wash, we've got a charity, we've got a church that meet 2-3 times a week. So they all pay, and they're all self-repairing leases. It's on our doorsteps. It takes me 2 minutes to walk there. But the main point is that they manage everything, and it's just the asset that's the key. So that allows time to do other things, because every time you have to organise a plumber, every time you have to organise things, you have to pay. And again, that's the beauty of it. So I think if you're starting out, we have smaller shops, like we have one behind our office, and she's a nail bar, a very small shop, £40,000 in this area. Well, so you can see how small it is. It's great because it gives her the opportunity to start a new business. What it does for me is that it's a different tenant type, if you like, so that we're not having to deal with the tenant, because she'll deal with her own repairs. The other side to that is that if the law came in that all one bedroom properties in a certain area, the landlord had to pay the council tax, then again you spread your risk. So that's what I would say to that. If you've got any comments, I'm happy for you to share your comments now that you've heard everybody's view.
No, it's brilliant. Just wanted to hear as much as possible. I think what I can take away from that is it really just depends on the context. There's no right or wrong answer. It's really just what information you have at the time and make the most informed decision that you can. And only hindsight can really tell you if it was a right or wrong answer anyway. But it was really helpful. Shed some light on the commercial aspect of things that I'll look more into. But just to clarify, at the moment, I'm not an estate agent now. I've left that role. My business is essentially property purchaser, which helps first-time buyers and first-time investors get their first investment property, or those who already have those as well. So the reason for the question was really just to understand how people are thinking at the moment, what the focus is, but I think it's really just ultimately contextual. But super helpful. Thank you very much for the answers.
Amazing, because you've got so much experience that you bring to the table, talking to estate agents, talking to clients, doing this, so many transferable skills, and you're just on the other side, which is great, because anybody coming to purchase a property from you, or that you're introducing, of course that's going to be amazing and very, very straightforward, because you can help with all those problems that you solved for other people in the past. So congratulations. Love to hear more of your story later, in the coming weeks. That'd be good. Thank you for your question. Adam has also asked a question. Adam, if you're there, you can unmute, or I can ask the question on your behalf. Are you there, Adam?
Sure. Hi.
Good to see you.
Hi. Good evening, Sunil, Paul, Oshad, and everybody else.
Where are you based, Adam?
We're based in Rochester, Medway. Our coverage area is generally Kent and some of South East London. because we moved down here from Bromley, so I know the borough very well. My experience stems back for 37 odd years as a management surveyor, an estate agent, and also a property redeveloper myself. Also, my partner at Rethink is Anna, and she's a commercial property surveyor. We have 3 stems to our business. One is commercial property advice and consultancy. I deal with, similarly to Topsy, helping investors expand or increase their portfolios, and also we also invest ourselves as well. So that's our strategy. In fact, the sourcing arm is going to be rebranded shortly, and part of Rethink Property Consultancy will be in collaboration with them. So that's watch this space. My question to Arshad about his property was, because obviously I've also looked into the commercial side as well for clients, was what type of property was it and what class use was it? Because that obviously has a large bearing on the value and the figures that were being presented. Also, are they based on a red book valuation? And I also understand the concept of the perpetuity with regards to the increase of value and income as time goes with us. Obviously, you can only base perpetuity generally on today's figures, although there are some projections and some educated assumptions that can be made to get to those figures for your long-term plan.
So are you just looking to ask what the detail is, or kind of to back the figures?
Yeah, I was just interested in what type of property it was. Was it industrial? Was it retail? Is it agricultural?
Yeah, so it's an industrial unit that's within a retail space already. So it's the last thing to be developed in there. So it's one of the things where it's just been sitting there rotting away. So everyone in and around it is really keen for something to be done. But until, as you can understand, the sensitive nature of these kind of deals, until it's signed and sealed, there's only so much I can kind of share with you. But yes, it was a light industrial unit, 8,750 square feet. We're going to chop it. Imagine a T. We're going to chop it up to retail units at the front, low chip.
Yep.
And that's going to be food, and then at the back there'll be a retail unit as well.
Okay, that makes a bit more now sense for me on the figures side, because obviously with a retail unit, as Paul said before, it's all about square footage in the current markets. Obviously with retail it's slightly different because you have several zones within the unit for renting. Obviously you have the shop front, the sales space, and then the auxiliary areas as well. So with the figures that you initially gave at the bottom of your diagram, was that based on red book valuations or current market rates since you bought it?
So with regards to the valuation and the figures I've used, as I say, I've used the expertise of my business consultant. I've also used spoken to independent surveyors as well, who, would happily value that above 500. In fact, they were saying, well, if you could bring it to me now, I'd put it on the market as is, kind of thing, and we could both make a turn. But yes, it's one of those ones. Let's just say I'm not confident about the valuation. I'm putting 450,000 down on it in the next couple of days.
Excellent. Well, that sounds like a diamond in the acre, right?
Watch this space, sir.
Okay. Thank you.
I hope that answers your question. If you want to come back in, happy for you to do so. No, okay.
Yeah, that's answered the question for me. Thank you.
Brilliant. Thanks for being here this evening. Appreciate it. Bev, you sort of put a question. You put a comment in the chat in terms of that sounds really good to me about not having tenants. Yeah, it's the Amazon effect, because the whole mentality is now gone, well, I can order it by midday today and I'll have it tomorrow morning, and tenants expect the same things, that you're going to be able to repair their boiler within 24 hours, you're going to attend that property within a very short amount of time, etc. And we had a situation recently where a lady reported her boiler that wasn't working. We attended within a 4-hour period. It's local, so we got our engineer. He went there, and he needed parts. Parts were going to come in on the Tuesday, so maybe 4 days before the parts came in. And the lady's going, well, why can't the parts come in tomorrow morning? I can get all my deliveries across the world, blah, 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 tomorrow morning. Why can't you get the parts? Fair question. Why hasn't he got the parts on the van? It was an old boiler and they needed to order in. But yeah, the expectations of the quality of properties as a result of HMO, serviced accommodation, the Amazon situation have certainly gone up. So tenant expectations need managing, but they've certainly gone up. And that's another reason to look at alternatives where you're not having to manage the tenant, but still have income ever increasing. Richmond, would you like to open up and ask you a question about?
Sorry, can I just come in there, because I want to pick up on something Adam said. Is that okay, Sunil?
Yeah, please do. Sorry, I didn't come back to you.
Having done commercial property for 30 years, Adam, I have a view about surveyors. Would you like to hear my view about surveyors?
I certainly would.
And they're like Santa Claus. They're like Santa Claus. I don't believe in them. Right. I've paid way under.
Paul.
Yes, I know.
Careful
John.
what you say, Paul.
I know, John.
I'm listening.
I'm listening again. Yeah.
I was going to say it depends on what type of surveyor you're going to talk about.
Yeah, any type of surveyor. What I find interesting about commercial property, and this is why I made the big deal about customer, Adam, right? What I tend to do when I buy commercial property is I look at what customers are going to be interested in that property and what rental I can get off them and what period I think I can get that, right? And then the bricks and mortar value, right, is of very little relevance to me at that point. Because I work it backwards, if you like, which is how much can this property make me per annum? How many years can I get that for? And what am I willing to pay for the property on that basis? So we have bought commercial property below a valuation, a market valuation. And we've also bought commercial property way above a market valuation, right? Because I'm looking at my rental income, my tenant, my customer, and saying, right, how long will they be in for? In this case, he's looking at blue chip customers. So you're fairly confident the 25-year lease will be a 25-year lease, right? And the only way they're going to get out of that is to buy themselves out of it. And if you've been around commercial property, you'll know as well, even when a blue chip customer leaves you, they have to buy their way back out of the lease. So they give you a big chunk of money, even if they leave, right? So I value commercial property differently than surveyors because I value it as a landlord. Which is, I say, right, what customer are I likely to get in here? And I usually talk to customers up front. I mean, we're building a 157,000 square feet retail park. That's a reasonable size, I think, right? But we're already, before the first shovel goes in the ground, talking to potential customers and looking at signing option lease agreements. And what we will pay for that property and what we've paid for that property is relevant to the rent that we can get in, not relevant to its market value. Because quite often what you find with commercial properties, guys, is if you get a valuer, a surveyor, to value a commercial property that's sitting empty or as vacant ground, very rarely will actually the landowner or the property owner sell you it for that value. Why would they? So you quite often have to pay above market value to get it, but it should really be based on your end user, your customer, and work the numbers backwards. Does that make a lot of sense to you, Adam, being around the job for quite some time?
Totally. Having done some business analysis in the past, always work backwards. Always. I totally agree. You have to work at it on the time, on your hold, and also your strategy in between. So I totally agree with what you're saying. And with commercial property, generally speaking, for any owners, I find they are generally long term. And like you said, the longer the lease, the better. Obviously, try to get it as a full repairing lease all the way if you can. And again, like also agreeing with what you're saying, you're looking at the tenant or the end user, and you have to put that in perspective for the class of use. So obviously, there's only so many slices of cake you can have in the catering business, for example, in a small high street where you have an X number of restaurants. Obviously, the cake doesn't grow, but the slices get smaller, obviously, with the amount. So you have to take that into consideration with the type of usage and the type of tenant you want. I totally agree with what you're saying there, Paul. Thank you.
Brilliant. Thank you, Paul. Thank you, Adam. John, Mr. Parker, would you like to come in?
Yes, sorry. My grandson was just making a lot of noise and I do apologise. Just for the uninitiated, Paul, I think you're really effectively talking about a residual valuation. And the same with residential, when you've got gross development value and you work back with all your development costs and overheads and et cetera, et cetera. So it's the same sort of process, really. So I don't deal in commercial property. As you know, I'm a residential valuer, but it's more or less the same sort of principle. So that's all, really.
Brilliant. Thank you, John. And John's done lots of valuations for our company. We've managed to get empty home loans from Kent County Council, and John's approved with them, so he comes around and he does valuations. I think the last time I spoke to him, he did 6 in one day for us, which was a fantastic day for him and me, because we got valuations in and we've got what we needed, etc. I think coming back to the previous question about commercial or properties on your doorstep, I've paid more money for properties. People are talking about below market, but when I look at paying £25,000 more over a period of time, that's going to be nothing because I didn't lose it. And number two, if I paid 25,000, if it was out of area, then probably the travelling costs or the cost of doing it up and everything else. So sometimes it's worth paying a little bit more on your doorstep to make sure that you've got it and you can, because I'm building a brand in my local area, so it made sense. It may not make sense to you, but so there's a question from Richmond. Did you want to unmute, Richmond, and ask a question? We will be done in about 15-20 minutes. So if you've got any questions, this is the time now to put your hand up or put them in the chat or just a mic, and then we can go. But Richmond, did you want to ask a question, please?
Yes, hi.
Hi.
Just related to the comment. Hi, can you hear me?
Yeah, brilliant. Thank you. Good to see you.
Oh, great. Likewise, yeah, thank you. I'm just putting my son to bath, so that's why I have to take off the. There you go. Okay, sorry. So go.
Educate them early. Educate them early. You know?
That is it.
What's your name? What was his name?
Jonathan.
Jonathan, good to see you. Hope you're doing well at school.
Yeah.
Yeah.
Good.
Good. Okay.
So going back to the subject, basically, commercial, as everyone's seen, Waitrose just made an announcement today regards to, just as an example. I mean, Waitrose just made an announcement today that pivoting their strategy. That I think that they're kind of copying what Marcus Spencer's been doing, because obviously the CEO's changed, new head on board. And I believe they're going to invest into little Waitrose and refurbishing their current shops. Let's say if my strategy was to say, okay, I would like to procure a large quantity of stores for them, and I'd like to buy some, buy and obviously provide it to them. How would you find out the requirement? What would, like, in terms of size-wise, location-wise? I understand they've got they're targeting a certain market, so they'll be targeting middle class market in upraising. But yeah, just want to see what's best. Like, let's say if you had a strategy and how you'd like to go and implement it, in a sense that, all right, I want to target the Waitrose, I want to supply them the properties, and just as a case study, basically. Hope that was clear. Sorry.
Yeah, no, it's a brilliant question. Thank you. Paul, would you like to come in on that?
I would, warning about commercial property. There's lots of classes of commercial property, and two of the classes that we tend to kind of stay away from is high street retail and office space, because that's a very fluid market. And you've got to be very careful. Now, if you're dealing with somebody like Sainsbury's, that's fine. You know, if you get a 25-year lease or a 15-year lease off of Sainsbury's, then you're probably relatively safe. But to go into the high street and kind of like, you know, let to the local hairdresser might not be the best market that you could have, because we don't know how long that high street's going to be there. So first thing I would say is, high street and office space when it comes to commercial, be careful with them. I'm not saying don't do them. I'm just saying be extra careful, right? Ashard's one isn't on the high street. It's kind of, it's in a retail park, and that's where the high street's moving to, as a retail park. And retail parks are relatively safer, at least safer than high streets. So that's the first thing that I would say. In terms of Waitrose, you'll actually find that if you go onto most of these large corporations' websites, and you hunt through their website well enough, somewhere in there they will have their specifications for stores, so the size of stores that they're looking for in the areas that they're looking for them in. We have dealt quite a bit as a consultant with, we were a consultant for Tesco's at one point in time, so we're kind of on the other end of that, Richmond, in terms that, you know, we were given the job of finding the locations when we were and building the locations. So we've been a consultant, or I've been a consultant for Tesco, so we understand that market very well. And quite often, if you approach them, it's either on their website, or if you approach them, they will give you the specifications in the areas they're ideally looking for. What doesn't happen with these major box stores is you don't phone them up and say, I've got, you know, a place in Kent, and they suddenly decide to move to Kent. Somebody at a superior level would have done lots and lots of work and decided whether they were moving to Kent probably 5 years ago. So, so if you contact the various organisations like Sainsbury's, they will give you the specifications. If they take you seriously, that's my only proviso.
Yeah, brilliant. Thank you, Paul. Richmond, we were trying to get to talk to Tesco's, and they said you need to sign an NDA before we'll supply any information to you. But yeah, that came through a commercial agent. So commercial agents can be connected. But as Paul said, if you can reach out directly, maybe talk to their property department, and that, you know, hopefully that you can get through the door, and, you know, do some business with them. But it's a great thing that you're doing. So yeah, just keep plugging away at it and let us know how you get on. So any other questions that I've missed that anyone who wants to come in on?
Paul's got a question, I think.
I have indeed, thank you.
Sorry.
Hi, Ashad. Good to see you again, mate. Fellow pin host. Jan's on the call as well. Question to you and Paul, really. Obviously, commercial leases are you're talking about 5, 10, 15, 20, 25-year leases. A lot can happen in that amount of time. How do you protect yourself against what happened to the likes of BHS and Woolworths?
Do you want to answer that, Sunil? Do you want me to answer it?
Yeah, but please do.
So if you've got a lease with one of the companies that goes down, then you're a creditor, and depending on how good your solicitors are and how well that lease is written up, then you can be a high level creditor as opposed to a low level creditor. So you can be way up there beside the bank in terms of any money that comes out of that company comes to you. So you're fairly well protected. I'm going to say this, right, and I wanted to make this point, Paul, before we closed, right, and you've led me into my point perfectly, so thank you, right. I couldn't have asked for a better question, right. Here's what you need to decide, guys, in business, not in property, but in business. And incidentally, I'm not a property investor. You might well be a property investor. I've been in the business of property for 30 years. And with business comes risk, right? And you make a decision in life. And I believe there's two personality types. There's two mindsets, if you like. There's an investor mindset and an entrepreneur mindset. The investor mindset says, I've got this money and I want to protect it at all costs. And the most important thing to me is that this pot that I've got doesn't go down. That's the most important thing to me. That's what I call an investor mindset. And an entrepreneurial mindset is, I will risk everything I have got to get what I want. I will risk everything I have got to get what I want. Now, as I said that in this room tonight, some people went, I would never risk everything I've got. And those people are probably have an investor mindset. And they should get the best investment that they possibly can to protect it as much as possible. And do you know what? Property as a whole might not be that investment. I don't know what is, because, you know, I've lived on this earth for a number of years now, right? And there's very little safe and secure in this earth. You know, what's the two things we're guaranteed? Death and taxes. Everything else is negotiable. So can you 100% protect yourself in commercial property or any other property? No, you can't. And if you want to, you probably shouldn't be in the industry. Is commercial less safe than residential? I haven't found it so. But somebody else might feel much more comfortable with residential than they do commercial. I would suggest that they did residential. Are either of them truly safe? Are either of them truly secure? Are either of them guaranteed? No. Death and taxes, they're the things that are guaranteed.
Brilliant.
Thank you.
Paul. Thank you, Paul, for the question, and thank you, Paul, for the answer. Paul, did you want to come back on that, on the answer that you received?
No, I just wanted to say thanks ever so much, and what a fabulous call it's been tonight. Thank you.
You're more than welcome, and it's good to see you. I haven't seen you for, I saw you last week, but apart from that, I haven't seen you for a while, but it's good to see you here. Unless there's any final questions, we are going to close. So I just want to say, I should thank you so much for joining us this evening. Fantastic presentation on your journey. Amazing, your commercial deal that you've got there, and I hope it sort of gets over the line. But the income that you've generated from that, absolutely amazing. The GDV plus the rental income that's going forward. You should be very proud of what your achievements are, and yeah, really inspiring as well. Paul, thank you. Did you want any final words before
I think to be honest with you, I think we've kind of just by pure experience level and the fact that, you know, as it said in my slide, I'm a professional speaker, so I speak quite a lot. And Ashard runs, Sunil runs these every week. I think we should leave the final words to Ashard, actually, because it's Ashard's deal that we've kind of taken as a jump-off point tonight. And that was the point of it, I think. It was a jump-off point to have a conversation about something different than, you know, we normally hear when property rooms, which is about two-bedroom buy-to-lets. So I think we should leave the final words to Ashard, because we've used his case study, his real-life £450,000 of his money on the table, for us to all look at and listen to and maybe think about. I think we should give Ashard the final words.
Yeah, no, that's fantastic. Before I do that, I just want to thank you, Paul, again for your time. You give it so freely. I think this is the third time that you've been here, and so much value every time. Ashard, did you want to give us your final thoughts? And again, congratulations, because, you know, people can say, oh, they bought property 30 years ago, 20 years ago, 10 years ago, last year, but you're buying it now, which is the key. You know, they're buying it now, you're doing it, you're in the market for it, and regardless of what goes on in the world, you're just creating wealth for yourself. So yeah, final words, over to you.
Thank you very much, Sunil and Paul as well. So it's been quite a journey. You know, for the last couple of years, I was on this road, on this property road. So if you imagine like a motorway, and I used to think I was in the fast lane, you know, a host of Glasgow Pin, 7-figure property portfolio. But really, since I started working with Paul and the blinker's been removed, what I realised is that I've been in the inside lane, the slow lane, and turning along. But because I was in and around people that were kind of operating at that level, it felt like I was in the fast lane. And building the portfolio, I was just adding any kind of, being that property investor. That to me was the slow lane. and what's happened over the last 6 months to a year, where I've earned more money in a couple of months working with Paul than I've done in a full year on my property portfolio, just shows you the level and the deals that I'm working with, where I'm operating at now. And that's because, as Paul pointed out, yes, there's risks involved. There's risk every morning that you wake up, if you wake up. But if you see the risks, then the things that we do in these rooms and the things that I'm planning on doing are just not for you. But if you can see the reward, you know, not only is there the reward in the conversion itself, but also the tenant. But do you know what the real reward is, Sunil? It's exciting. You've seen my buy-to-let portfolio. I mean, you could just take the same picture and just repeat it 12 times, couldn't you? And that's almost the definition of madness, isn't it? Doing the same thing over and over and over and again. So if something this excites you, then reach out. But if it doesn't, and all you can see is the risks, then maybe this fast lane, this property business owner, these commercial deals where you're making 450,000 profit isn't for you. But for me, I'm grateful to be on this journey, and I'm bloody excited about it. And the people that are in it with me are equally as excited. So onwards and upwards. And thank you for tonight.
Brilliant. Thank you for your time, and thank you for your inspirational talk and what you're doing. Whilst you're talking, it was really interesting because it came to the thought that it's not what you get, but who you become on your journey. And I think you summed that up so well. So thank you again. Thanks for everyone for joining us. Thank you, Paul, for all your great knowledge. And we'll see you soon. We're on Clubhouse at 7:30 on Friday morning, so join us there. Otherwise, we'll be back in the Property Millionaire room next month, and another Zoom on the 3rd Wednesday. So we'll see you soon. If you need anything, reach out to me. I can connect you with Paul or anybody else here. Ashad, if they want to talk to you, are you okay? Yeah. So if you need to connect with anybody, then please feel free to contact me. Thanks again, guys, and we'll see you very soon. Take care.
Good luck, everybody. Well done. Thank you.
Thank you.